Before I check how far the bulls have bolted this past week, some bullish news from the top end. AACo's plans to open a meatworks in Darwin has met with a lot of scepticism from within the beef industry. Many have tried and all have failed has been the usual comment. AACo boss David Farley has revealed to Landline the time frame for the project and its budget.
Well, time frame, we're quite impatient about it. We're very, very keen to get a plant up and running in 2012. It looks more like now being a July, August completion to build it. But by the time we do all the infrastructure work, it'll be based off a hot boning model at the start, but there'll be room left in there for extra chilling capacity if we ever want to change our model. But at the moment, circa-wise, it's somewhere between a $40 and a $50 million spend.
$50 million plus, that sounds pretty good. I guess the only problems now would be labour, supply and markets. But having said that, I have to say there seems to be less cynicism now than there has been in the past about the viability of such a project. So good luck to AACo, they'll certainly need it. Moving on, and let's start with the live trade out of the north, where there's been strong activity as the mud clears and prices have eased a fraction. Out of Darwin, prices put steers at $2 and heifers at $1.90 a kilo. Now to the sale yards, where numbers offered were way down last week as producers reacted to an easing market, checked the grass in their paddocks and decided to hang on for a few more weeks. Queensland yardings were down 38% and New South Wales was off 26%. But the processors, at least one of them, kept their hands in their pockets and prices, well, if they didn't crash, they certainly tumbled. It's also worth a mention that our dollar is making life very tough for the exporters. And this action last week left the Eastern Young Cattle Indicator at $3.87, down 9 cents for the week, but still 12% above this time last year. Lamb and sheep numbers were also down. Victoria slumped 35%, and obviously the icy weather kept the sheep buyers at home as well. Prices headed south. For lambs, the slump was dramatic. Once again, a bit of relativity is worthwhile noting. Both these prices are up on this time last year, and in the case of lambs, more than $1.50 above the 5-year average. And it's also worth noting, for the first time in memory, the retail price of lamb is now higher than that for beef. Let's move to grains now, and some OK business news in America helped stop a slide on commodity markets. Prices finished on an up after sessions of limit down losses. Wheat is at its lowest since mid-March. Corn is travelling adjacent to the oil price, while soybeans closed with some strength despite weak exports. And local old crop prices were steady. Traders are keeping a close watch on planting conditions, which seem to be pretty good everywhere except in Western Australia. Canola and sorghum lifted a fraction. I'm told there's a massive amount of sorghum around. Wheat was firm at $270 a tonne. And local futures trading was subdued as buyers noted Chicago trading. The ASX reports that WA wheat dropped about 1%, while East Coast milling wheat January delivery was down just a fraction. And back to New York now for the soft commodities, and buyers who paid top dollar for cotton a few weeks back are now walking away from these contracts. How they can do it, one would never know, but they are. So cotton closed limit down while the December contract is 30 cents less. Sugar continues on the toboggan as reports emerge of a massive sugar beet crop in France, the world's biggest grower of that crop. And the dairy business in Australia remains very strong. It's worth $2 billion in exports for Australia each year. And although the dollar is a problem, Dairy Australia says demand in new markets is sustaining export numbers.
We've seen really strong demand out of China in particular for milk powders, and we've also seen Russia re-entering the market for butter and cheese. So that's taken a lot of product off that international market and really tightened the demands and supply balance. And I guess out of the Southern Hemisphere, there hasn't been as much milk as probably people were expecting. We've had some drought conditions in New Zealand and some while it's been a wet season, it's also been a tough one in terms of production. We haven't seen much of a production increase out of here either. So that's tightened the market considerably, and the demand outlook is still pretty good.
Oceania prices last week remained firm. Both those prices are well up on this time last year. And finally to wool, where there's been a bit of a worry wool prices might tumble alongside cotton, but that's not been the case. Last week prices actually rose 1.3%. Two lots of 12 and 12.1 microns sold for 20,000 cents in Melbourne last Wednesday. And the Eastern Market Indicator closed at 1,323 cents. And as usual, China was the dominant buyer. And that's the Landline check on prices.